you could have a very brief blip. I don't know. I'm just saying a number, just to pick a number, 3,000 or whatever, which used to be, a big high watermark a few weeks ago, and now it's like, oh my God, 3,000, gold's crashing. So, everything's changing so fast now, and retail can't keep up with the reality. Yeah. So that could happen, but if it does happen, that would be the bottom, and then we'd be on our way up. So either short in any continued correction for would be short in time, or shallow in price. That's what I would speculate.
In today's news recap, why is China buying so much gold? The price of gold has been on a monumental rally in recent weeks, driven by renewed demand amid rising economic and geopolitical tensions. Experts credited the surge to buying from the Asian market, and China in particular, telling Newsweek that gold bugs in both the public and private spheres appear to be increasingly banking on the metal's long-term safe haven status, given the contemporary threats facing global trade. Early last week, the metal broke through $3,500 per troy ounce for the first time in history. Although it has since dropped to just over $3,300, gold is still priced around 40% higher than this time last year, and well above what some analysts had previously expected it to reach by the end of 2025. Adrian Ash, director of research at gold trading platform Bullion Vault, said that the rise had been driven by Chinese private sector trade, with huge jumps in trading volumes observed on both the Shanghai Gold Exchange and the Shanghai Futures Exchange. Joseph Cavatoni, senior market strategist at the World Gold Council, said that investors across the globe were hoping to mitigate risks in the face of continued volatility. He told Newsweek that much of the recent surge had been driven by Chinese buying, adding that the transparent flows into the country's central bank community had been record-setting. Cavatoni noted that China, both private investors and state institutions, had been actively purchasing gold over the past 15 years, but said the trade and conflict-related factors driving this trend had amplified significantly since the start of President Donald Trump's second term. China has been the central target of the administration's attempt to overhaul global trade in America's favor. The country is exempted from the 90-day pause on reciprocal tariffs, and its imports are now subjected to 145 duties when entering the U.S., as stated by the China Gold Association last week, upon announcing a 30% year-on-year increase in first quarter domestic gold bar and coin consumption. Complex and changing geopolitics and economic uncertainty have further highlighted the hedging and value preservation functions of gold. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
I don't know if delivery has anything directly to do with the amount of gold on the exchange. You'd have to actually take it out, because delivery, I've done delivery before. I've gotten physical delivery, but the word is kind of false. It's not physical delivery. It's sort of physical delivery in the sense that you have, instead of the notional right to, let's say, 100 ounces of gold in the ether, you have a right to one specific 100-ounce bar, which they could say, well, it's that one with that serial number, so there's your physical delivery, but you can't get it unless you have like $1 million in liquidity and you have special permission and you're connected to a bullion bank or whatever it is. It's possible. It's just not for retailers. The physical delivery has to do with warrants being exchanged. It doesn't have to do with gold leaving any of the vaults. But that could happen. Deliveries could could correlate with the supply going up or down. It just doesn't have to. So right now, what I've seen is that the gold supplies, meaning the amount of bars that are in either eligible or registered, they hit a high mark. I think it was like 42 million ounces, maybe 43, something like that. I could be off by a few million, but the point is, wherever it is, it's been edging down slightly now. So either they're being pulled out of the vaults or they're going back to the UK or to Switzerland. I don't know. The thing is, I'm not looking at that directly right now. I was curious because I wanted to see how high they would go, and I think it has to do with tariffs, because in the atmosphere of uncertainty, nobody knew for sure if gold bullion was going to be tariffed. So if the bullion banks were going to be forced to close their short positions through delivery, like they had a risk, right? If the price is going to go up and they couldn't satisfy it through delivery without paying like a 25% tariff or whatever, then they'd be screwed, basically, because they wouldn't be able to save their dollar positions through delivery. So they had it front loaded and just brought to New York beforehand. But now that bullion isn't going to be tariffed anyway, it doesn't really matter. So it'll probably head back from here. If they can get reassurance from the Trump administration that he's not going to mess with bullion.
In today's news recap, silver price jumps to near $33 as U.S.-China trade tensions ease. Silver price trades firmly around $33 during North American trading hours on Wednesday. The white metal strengthens as fears of an intense trade war between the United States and China have diminished after President Donald Trump signaled the possibility of a deal with Beijing. Discussions with Beijing are going well, Trump said on Tuesday while addressing reporters at the Oval Office, and showed optimism that both nations will reach a deal. Trump added that tariffs on China would not be as high as 145%, but they wouldn't be zero. Theoretically, easing global economic tensions reduces the appeal of safe haven assets like silver. However, the metal is rising due to its industrial demand. Silver has applications in various industries such as electric vehicles, electronics, power and cables, mining, etc. Financial market participants expect that easing tensions between the world's two largest powerhouses will favor both economies. Meanwhile, the intraday corrective move in the U.S. dollar has also supported the silver price. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, surrenders initial gains and falls back to near 99. The USD index gives up intraday gains, even though Donald Trump has pushed back fears of sacking Federal Reserve Fed Chair Jerome Powell. Still, he is frustrated with Powell for holding interest rates too restrictive. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
The two central banks that are buying the most are actually Poland and India. So India has been buying consistently, and Poland as well. Now, Turkey has also, they've been up and down. I think they're at a new high in their gold holdings, but they buy and they sell every month depending on what their currency does or how desperate they are. So I don't really rely on them. But China isn't buying much or hasn't bought much through Q4 2024. Russia hasn't bought any significant since 2020, or at least not that they're telling us. And Japan bought a bunch in 2021, but hasn't done anything lately. So there isn't that much going on, at least up to Q4 2024, except for Poland and India. And I think India has been more aggressive. Now, I don't know enough about the gold market dynamics to tell you if the buying between Poland and India is enough to push the price higher. I would suspect not, because they're also sellers. For example, Kazakhstan, which also showed up in the list, they were strong buyers up from, I think, like 2018 to 2022. Then they maxed out and they've been selling ever since. Not like huge amounts, but enough to cancel out some of the demand from Poland and India. So we're going to have to see what the numbers are for Q1 2025. And it could show some significant buyers there, some central banks getting nervous on the Trump tariffs. Who knows? I don't think that. I just want to clarify that I don't think that central bank buying of gold is really that important, and I don't mean that I don't mean that it's not going to drive the price. It will, but in the end, any central bank that has gold, it's not going to be enough. It's not going to save their currencies, because they don't see gold as money. They see it as an asset through which they can manipulate the value of their currencies, which are the money. That's how they see it. In order for gold to be money for a central bank, they'd have to stockpile it and then stop printing and then let their banking systems all collapse, and none of them are willing to do that. So it's all a game for them, and it doesn't really matter how much they have. Eventually, in the end game, it'll all go into our hands, hopefully, and the central banks won't have any because they'll be busy selling it to try to save their currencies and then fail. That's how that would be the best for us. It would be very traumatic for users of currencies, but that would be the best outcome.
What do you think of Rafi Farber's take? Do you agree with his bearish view on gold? Are you buying this dip? Post in the comments section down below your honest opinion, and share with the stackers if you're buying more, selling, or getting active in the numismatics world. Let us know. We really want to know. Now watch this video right here because it's a perfect fit for you, and I'll see you on the other side.